we have abandoned the traditional teapot because it betrayed us last week.
It did.
By last week, I mean earlier today.
Yeah.
Because discerning viewers out there are going to see that we are wearing the same clothes.
Now, so, I do have one question here. This is gluten-free, non-dairy, and vegan, but is that drink paleo?
This?
I need to know.
Wait, where do you see?
It's right there.
Oh yeah, gluten-free, non-dairy, vegan.
Wowie, wow.
Is it paleo?
Now, does mine say that? I don't think so.
I don't think that it's paleo because I think a paleo person, like a really hardcore paleo person, would look at this and say, what is Kevita probiotic culture? I don't think Og drank that.
Og didn't have glass bottles and plastic labels.
True. That's not vegan. I mean paleo. And you know what else isn't paleo? The internet.
If you pour it onto a leaf, they can lick it off.
That's true.
Like a dewdrop.
Yeah.
This tastes oddly like a probiotic dewdrop.
Well, that is how paleo people need to consume all beverages off of a leaf.
I don't... This is derailed.
That's how I like to start my podcasts. Utterly derailed completely.
Yeah. Off the rails. No
there
scope.
We go. Yeah, there we go. Let's throw some of those videos in the show notes.
280 degrees. How many spins is that?
No parents, no rules, no problem. We were skiing yesterday, and every time we get to the bottom of the hill, I'd be like, yeah, I was about to do a 1080, but I just didn't want to intimidate everyone around me, you know.
That's really thoughtful.
It was really thoughtful.
Honestly?
I just want them to have a nice day on the mountain. So
I would be intimidated. It would hurt me.
Exactly. Yeah, it would. I don't want to hurt anybody. I don't want to hurt anybody's feelings. I don't want to hurt anybody physically. So I'm going to just go about my normal ski routine without busting out the 1080s that I can definitely do.
Well, you do that alone.
Yeah, when I'm alone, when nobody's looking, and when my little brother isn't there to mess me up.
Yeah.
All the time.
You'd film it, but that's cocky.
Yeah, again, it's all about creating a welcoming environment. I don't want to intimidate anybody. So I have to keep my ridiculous ski talents a secret.
Yeah.
For the greater good.
There's somebody out there who like walks around all day thinking they're holding in their greatness. There are enough people. Somebody out there thinks they're constantly being nice to the people around them by trying to be humble.
I'm the most humble, actually. I'm more humble than anybody else in the world.
I mean, I'm a gift to the world, and they don't know it.
They just don't.
They don't know it, but that's okay because if they knew that, then I couldn't convince them that they're a gift to the world.
Exactly. It's my sacrifice. So... Anyway,
what is this episode about?
Far from the lofty ideals that we are proselytizing right now.
Dewdrops?
No, we're not talking about probiotic dewdrops. That's our next podcast episode. Yeah, probiotic dewdrops.
It's a cool title.
That's the name of my new band, actually. Probiotic dewdrops.
Yo, they call me Dewdrop.
Yep, there we go. That sounds gross, actually. Oh man, welcome to being 14 years old. Anyway. This episode, we're talking about the nuts and bolts of business. We've talked about freelancing on this podcast before, and we've talked about some of the loftier ideals when it comes to entrepreneurship. But I don't think we've talked much about the really detail-oriented stuff. The stuff that I think actually puts a lot of people off of starting their own business or attempting to do stuff. It is, yeah, and it's really confusing. Like, what kind of business structure am I supposed to have? Am I going to get sued right away? How do I do accounting? How do I even do taxes? How do I do any of this stuff? How do I get customers? All like the really nuts and bolts, in the trenches type questions.
Yeah.
So I wanted to go through some of that in this podcast. I know you've learned a little bit about how to do this stuff over the years, but I've been living and breathing it for 7 years at this point.
Oh, so yeah. I defer to your expertise. I once researched LLCs versus partnerships versus stuff back in the Dizzy.
There we go. When
we were trying to run our music collective.
Oh, yeah. What'd you end up doing?
Just a partnership. We didn't make it fancy. And it didn't last long enough to have made that worth it. So that's okay. But I did a lot of research. And was very paranoid about a lot of things. As one who, that perfect use case, I was like, oh God, am I doing this wrong? Are we going to get, we're not going to get sued, right? I don't know what we
immediately
get.
Sued.
What would we even get sued for? I don't know, Martin. It might happen.
It could. It could happen.
Yeah.
They could sue you for your music being too dope.
Yep.
See, if your mixtape is too fire, then someone will sue you for the burn wounds. That's the risk you run.
I would like to take this chance to take down SoundCloud.
Can we just delete it? I was so happy when they said they were going out of business, and now they're not. And all these internet rappers are still on the internet. Ugh.
I'm just so steamed.
So I figured I'd start by just talking a little bit about my own entrepreneurial history. So even early on, I was a little bit of an entrepreneur because instead of finding a paid like employee job, my first job was printing out flyers for lawn mowing, and I would just go put them on people's doors. And I got some customers that way. And my mom instilled into me at a very early age that if you're going to advertise a service, you need to have something that differentiates you. So I put on my flyers that I would also pick up your dog poop before I mowed your lawns. Because a lot of lawn companies are like, please have your lawn cleaned before we come because we don't want to have to run over stuff. So I said, I'll clean your lawn up for you and then I'll mow. And I'll only charge $30 because I'm a 13-year-old kid who doesn't know what to charge at all. But that worked. That got me some clients. So that was like my first little taste of entrepreneurship. But then I went to high school and I tried doing some reading about how to start your own company, and I got completely overwhelmed. And I remember specifically thinking that the finances involved in running a company, like doing the taxes and the expensing and everything, was so difficult that I should just never even try it, and I should just throw away any entrepreneurial ambitions I had and be an employee. Yeah. Because the money's easy, which I have since learned that it's complicated, but it's not that complicated. B, it is worth it at a certain point to just get an accountant. Yeah. You know, at which point they do it for you and you just pay them. And C, you can learn anything. You know, it just takes some effort. Yeah. It's not impossible. And eventually I did learn the ins and outs of Schedule C's and how to itemize expenses and all that kind of stuff. Like, it seems super complicated at first, but it's really not that complicated.
Well, a lot of people have learned helplessness when it comes to technical stuff of like any kind. Mm-hmm. Anything that has special vocabulary and or even involves touching a keyboard. It's just, that's impossible for me. But
and a lot of times...
Like you can do it, though.
Yeah, you can. And a lot of times, these industries use purposefully complex wording to make it seem very obtuse, so you can't get into it. They want to make it seem like it's very impossible and only a select few.
TurboTax doesn't want it to look like I could do it by myself. I'm going to pay them.
Yeah, doesn't Intuit own TurboTax?
Yeah.
I remember I think I watched a John Oliver episode where he was saying that it would be pretty easy to set up a system where the government does your taxes for you. Essentially just says, this is what you owe. Because your wage information goes to the government. Like, all of that information goes to the government already. We could pass a law today that says, all right, the IRS is going to tabulate what you owe and then you'll pay it.
But what about the money to TurboTax?
Exactly. Intuit and some other companies have lobbied really heavily to not let that kind of a bill pass. Like, really heavily. So basically, their entire existence somewhat hinges on keeping the tax code really complicated and make it so that we have to do our taxes ourselves. And I will tell you, doing taxes as an entrepreneur is more complicated than doing them as a single person.
Oh, they succeed. They do a great job. Usually. It's very complicated.
It is. But it's still doable. It's doable. So, and I've learned it. And hopefully this episode may guide some people to where they need to look.
Yeah.
Because I know that for me, it was like this huge process of Googling forever and just hoping that what I was reading was correct. And in certain instances, I would literally read the actual IRS tax code to be sure. Like the mileage deduction for driving your car for business purposes, I just went to the actual IRS website and read that whole thing because I didn't understand how to do it.
Well, you don't want. It's terrifying, the idea of being wrong. The IRS is going to break my kneecaps and then make me eat them.
Yeah, well, the most terrifying thing for me, actually, I think this was a big fear of mine in high school, was that I would do it wrong and then get audited. And of course, everyone thinks that an IRS audit means they bang your door down or kick your door down and raid your entire business. And I don't know. There's like different levels of audits I've learned. Sometimes it's just like, hey, we think you made an error, so please fix it and pay what you owe. Sometimes it's like, hey, we need you to send in this paperwork. And then like only in the most egregious cases do they actually send somebody out to go through your books.
Yeah, they're not going to be like, I'm going to need a 20. Looks like you missed it.
Looks like you missed $20 in tax payments. You're going to jail forever. Yeah, you can kind of feel like that, to be honest. So I want to talk about some of the nuts and bolts stuff. And I want to start with different business types. So like you kind of alluded to earlier, there are there's 5 business types that we're going to talk about. There are more, but there's only 5 that are worth mentioning. So there's a sole proprietorship, and this is the most basic one. And if you start doing freelance rap, beat consulting tomorrow for all those SoundCloud rappers, and you charge them, and you don't set up a business entity, then you are automatically a sole proprietor. All that means is you're doing work for yourself, you're bringing in money, it's under your name.
Yeah, you didn't need any papers.
There's no corporate structure around it. And from a tax perspective, you would just report that as normal income. It wouldn't go on like your wages and salaries box, it would go on other income. And that basically just denotes that there was probably nothing withheld from it, or it's not from an employer.
Yeah.
It's just money you made. And a sole proprietorship is attractive because it's really easy, because there's nothing you have to do. I mean, if you're operating under a business name, you may want to get that business name trademarked eventually if you don't want someone else to use it or something like that. But you don't have to. And you can set up Martin's Beat Consulting Service and have a website and do everything and really do nothing with the law or any sort of legal structure, and you can operate just fine.
Yeah, and with a name like that, I doubt anybody else is going to steal it. So
yeah, nobody wants Martin's Beat Consulting Service
bit.
except for me.
Yeah.
I want it
just
to make you cry. So I'm going to take it. The downside of a sole proprietorship, and this is the same downside with a partnership, a general partnership, is that there is no limitation of liability. And what that basically means is that your butt's on the line for anything that goes wrong. So if your business is horribly in debt, that means you're horribly in debt. If your business gets sued for something, you get sued for something.
You personally, your stuff gets taken.
Yeah, so if you screw up in some big way, you consult on somebody's beat and you accidentally throw a fart noise in there and they were actually playing that for some royalty over in Scandinavia and they decide to sue you for that, well, they're probably going to lose. But if they do win, they can come after your personal bank account.
Yeah, and that's a little scary if you're in any situation where you think you're going to get sued. Mm-hmm. Or even when you don't think you're going to get sued, because sometimes you just don't know. But that's a pretty scary thought. Now,
the industry you're in will in part determine the risk of being sued.
Oh, yeah.
You know, if you are a doctor, you know, every doctor is required to have malpractice insurance because something can pretty easily go wrong. If you're a blogger on the internet or you're consulting on people's SoundCloud beats, there's very little that's going to go wrong. It's a very small chance that anything that could possibly be used to sue you is going to happen. So there's always that. You have your risk tolerance, and then you have the just general amount of risk in your industry.
Yeah.
And you can also reduce risk for stuff like that without going to a different business structure. You can have a contract that your client signs that says, hey, if I accidentally throw some fart noises into your beats, I am not liable for your offending royalty.
That sounds like a weird contract, and I would not sign.
I have that in every contract that I put out.
In quotes. So what's going on here?
I have that in everything. So you can have a contract. And while we're talking about it, contracts in general are good to use. Anytime you're doing business with somebody, it's good to have a contract. So I designed websites for people. That was my first real quote unquote entrepreneurial thing.
Yeah.
And I had a contract. That's very useful, both for limitation of liability things, but also for stipulating things like, oh, you can only ask for so many changes before I start charging you extra, things like that. And actually, I'm going to put contracts on my little outline so I don't forget to come back to them because they are very important. But you can also get business insurance. So if you were in a more high-risk industry, you can buy business insurance and that can cover you under certain things if you do something wrong, maybe. Or if you break something when you're at a client's place. Oh, good example. So I was a web designer, and in high school, I put my web design ads on Craigslist. And this lady, she answered my ad and she said, we don't necessarily need you to redesign our website. What I'm actually hoping you can do is set up some webcams in my dog daycare and then stream the feed to our website so the owners can log in and check on their dogs during the day. And as an impressionable and very naive 18-year-old kid, I said, okay, I'll do that for $50. Because in my head, it was, I'll just plug in a couple of webcams, hook them to a Ustream, embed the Ustream, and I'll be done in 10 minutes.
Yeah, that sounds super risky for $50. I might burn your house down.
So what ended up happening was I go to this person's dog daycare. What I learned is she has 2 locations. So it's actually 2 different jobs. And the computer was in a completely different room than the dog daycare room. So I had to figure out how to cleanly string USB cable, and I had to get a bunch of USB extenders. And then it turned into like the biggest, craziest project ever. I learned the iron law that IT always takes longer than you think it does. And in this case, we opened up her computer because it was having some problems while I was trying to get the stream to work. We open it up and it's just full of dog hair. Like, I'm not even kidding, like full to the brim of dog hair. So we clean that out, and then we go to our second location, and that computer just dies. So
Permanently, or
that computer just died. The second location made the first location look like a walk in the park. The second location, her computer died, and also the only way to run the cable from the office where the computer was to the dog daycare room, I had to go up into the attic of the building and string it through the attic. And what I learned about attics of big buildings is it's not a solid floor up there. It's like a lattice of 2x4s, and if you step off the 2x4, your leg will go through the very
it's kind of
fragile
like
ceiling.
Yeah, it's like my grandma's attic. You gotta watch yourself.
So very fortunately, I had decent enough balance to not send my foot careening through her ceiling.
You could have broke their ceiling, injured yourself.
Yes.
But landed on a dog and been sued and in the hospital at the same time.
Yes, that definitely could have happened. Yeah. Looking back on it, it was riskier than I thought. And I was also just like sweating up there, and it was awful. And the computer died. So, of course, what did I decide to do? Get another computer off Craigslist for cheap because I wanted to make it cheap for her. And I'm like, I'll just put Linux on it. That'll be easy. Turns out, no webcam drivers for Linux.
So I remember a time where that stuff didn't work very well for Linux drivers. That was tough.
Yep. So we ended up having to buy a brand new Windows computer, but I got it working. There was a web stream on the site. People could watch their dogs. It all went fine. And this lady, she was so cool. She was like, I know you put in way more than $50 worth of work. So I think she ended up paying me $250 and then giving me that Linux computer.
Oh, nice.
And I took it to college and I learned how to use Ubuntu. So happy ending.
Yeah, that's
could have been bad.
That's not bad, but it was, you were definitely on the line for all of that.
Exactly. So there's sole proprietorships, to go back to our types of business here. There are general partnerships, which are essentially exactly like a sole proprietorship, except for there are multiple people working on it.
Yeah, it doesn't have to be just 2 either.
Yeah, it could be multiple.
More than 1.
Yep, just any more than 1. But there is still no real legal corporate structure. It's still, everyone is on the line, pretty much. And you share the assets informally.
Yeah.
This was actually the first thing that with my web design business, it was a partnership. And later on in the episode, I want to talk about the dangers of partnerships because they can be dangerous.
Sounds like a relationship episode topic.
It is a little bit, yeah, it can be. Okay. It is almost like that. And then you get into the corporate structures. So the first one is LLCs. And the LLC is probably the one that most people are going to use. Really, so an LLC stands for a limited liability company. And it is a structure that can give you some protection from liability, like the name implies, limited liability. So if you have a limited liability company, now you have a separate business entity. You have to file papers with the Secretary of State, and then you have like a business bank account, business credit card in some cases. Basically, you're trying to separate your personal life from your business. Yeah. When you do that, it becomes more complex because now you become an employee of the business, even though you own it. And for most people who have LLCs, say maybe like a dentist that's practicing on their own, or a lawyer, or a freelance writer or something, you know, if they're doing all of the work themselves and every single dollar comes as a function of them doing work, then their salary is going to be every dollar of profit. And it's going to be taxed just like an employee's salary is taxed.
Yeah.
Another thing you can do, though, is like in our case, we have an LLC, but not all of the money comes directly from my efforts. So I can set like a reasonable salary for myself, and then I can also take dividends on top of that, or distributions, I think it's called. So it's more complex, but you have some protection in case you get sued, and there are some, there can be some tax benefits to it. Actually, not in the LLC, never mind. So this is where it gets confusing. That's where you get the benefits of corporations. So there are two main types of corporations, S and C. The S corporation is what they call pass-through entity, which means all the profits are still kind of on your taxes, but it is a corporation and you still can pay yourself.
What's S stand for?
I don't know.
Super
corporation.
It's super corporation and then corporate corporation.
And corporate corporation, yeah. So the main difference I know about here, and this is not that important for people to know because most people will never form a C corporation, is that C corporations are taxed as an entity and then you are also taxed as yourself as well.
Oh.
And it can get, there's like shares and stock and all kinds of crazy stuff that comes up with it.
Buy low, sell high.
Buy low, sell high, or buy high, sell low, and cry.
Okay.
That's my investment strategy, actually.
That's a good one.
Yeah. The S corporation is the one that's interesting. And that's actually, I think I got a little confused. That's where you can do the whole have a salary for yourself, and then there can be some distributions if you end up making more than your salary as well. So, and then you can have extra employees if you want, or you can just pay people as contractors, or you can enlist the services of other companies, basically. So with everyone that I work with within College Info Geek, they're all contractors.
Now, what would make them legally different as an employee? What would that be? If somebody wants to start a business, are they looking for contractors, or what's an employee? What's the bonus for them?
What's the bonus for who?
The person who is watching this and presumably starting some sort of business. So why would they hire an employee and not a contractor? Why would they do that? What do they get? Like stability? Like, I got you for a long time?
Really not much. Honestly, like...
It's just like a heavier commitment.
If you have an employee, I guess the only real benefit from the employer's perspective I can think of is if you want to provide the stability of an employee relationship to the person you're employing, if they would feel better about that.
Okay.
So really, the reason corporations have employees is because the law in many cases requires them to. Unless you are meeting a specific set of criteria, if someone's working for you full time, unless like you meet some specific criteria, the government will consider them an employee, which means you are obligated to provide unemployment insurance. You have to pay Medicare. On your taxes, you pay a certain amount to Medicaid, Medicare, Social Security. If you were employed by a company, they would pay half of that, and then you pay half of that. So you pay 7.5% of your income to those things, and then they would match that. As a contractor, you pay all of that. You pay the 15%.
Yeah.
Now, somebody might, on the surface level, think, well, hey, it's awesome to be an employee because I only have to pay 7.5% on that Social Security stuff. But where do you think that 7.5% on the employer side is coming from? It's money they're not paying you.
Yeah.
So in the case of you and me, we still have a contractor relationship, and that's because both of us have decided that it's better if I just give you all the money that I would have spent on those things.
It's also easy.
And it's easier.
I like easy.
Yeah, and the way that we work right now, it still works legally for us to do it that way. But if, like, say, I bought your computer and we had an office and I was like, Martin, you need to be in this office 8 to 5 every single day.
Oh, because you can't control schedules.
I can't control your schedule.
Just work.
I can't control the way you work. There's like a lot of restrictions.
You get the output that you wanted, but
essentially, like, we operate as if you were a company doing work for me. Okay. So like, I can't really tell you how to code the website legally.
Tables, nothing but tables.
Nothing but tables, yeah. And I want a marquee.
Yeah.
Marquee on every page.
Yeah.
Ooh, now you're an employee.
It's gonna be good.
Yep. So yeah, I mean, you choose how to code the website, which works just fine because I don't know how to code a website very well anymore.
It's still tables.
You know. It's still just tables. It's tables with a bunch of CSS breakpoints.
Yeah.
Ooh, that would be terrible. Yeah, but I digress. That's corporations and LLCs and stuff like that.
Okay.
So for the budding entrepreneur, you are probably going to start with a sole proprietorship. If you have another person, maybe a general partnership. Once you get a little bit more established, it is very useful to form an LLC for those protection purposes.
Yeah.
And eventually down the road, you can look into the S corporation stuff. I don't know if I would ever do a C corporation. I don't understand the benefits of it. And I would like to keep my business somewhat small, so I don't think I need it. So let's talk about accounting. This is where I was really, really worried about being an entrepreneur. I had no idea how to do accounting. I had no idea how to do the taxes, anything like that. So let me quickly run through how some of this stuff works. Essentially, you need to keep a record of money that comes in and money that comes out. Now, I took Accounting 101 when I was in high school. I took the college version of the community college, and we had to learn double entry bookkeeping. You don't got to do that because there are tons of apps out there that will do it for you, essentially. We've had FreshBooks on this podcast as a sponsor in the past, and a lot of my contractors use FreshBooks to invoice me and to do their bookkeeping. I use one called Xero with an X instead of a Z, and Xero just happens to work a little bit better for the type of work I do than FreshBooks does. FreshBooks works really well for freelancers who need to invoice a lot of people. I don't need to invoice hardly anybody at all, and there are some other features in Xero that I do need, so I use that. And I think I pay even more than FreshBooks costs potentially. And then there was one that I used way in the beginning called Wave Accounting, and that one was free. And that one doesn't have some of the fancy bells and whistles that Xero and FreshBooks has, but it does make it pretty easy to log expenses, makes it pretty easy to generate a report, and it won't do your taxes for you, but the reports it generates makes it pretty easy to figure out how to deal with taxes.
Yeah.
So when you get money, you record that as money in on your accounting program. And when you spend any money that has to do with your business, that is an expense. And it is very important to make a record of those expenses because anything that you spend on your business offsets the revenue that comes in. Yeah. And you're only taxed on the net profit. So if I'm running a web design business and I do $10,000 worth of business in a year, but I spent $2,000 on some new software, maybe a new laptop, well, I only have $8,000 of profit to be taxed.
Yeah.
Which is pretty important when 20 or 30% of your money is going to taxes. So you want to keep a record of that. Also, if you are an entrepreneur, you need to keep your receipts. And I don't keep the paper ones. I just take a picture of the receipt with ScanBot. That's the app I use. I used to use Scannable, but it got really buggy on me. Kept logging me out. So ScanBot works really well. It digitizes your receipts, and I think it also does optical character recognition.
Oh, that's cool.
So you could even search receipts if you had to. But I always just make sure I have those. And those are things you need just in case the IRS ever does audit you. You need to have records of all of your expenses. Otherwise, they're going to say, you just made that up,
Yeah.
And I mean, like, it seems a little dumb because you could just bring up the credit card statement and be like, it's right there, it's proof. But in a lot of cases, they want the receipts. So I just make it a little rule to always take a picture of that receipt and keep it in Evernote.
Yeah.
Make sure I have it. And then taxes. So the biggest lesson that I learned, and I learned this lesson in 2013, and it was a very painful lesson, is that there is self-employment tax and then there is income tax. And what I thought early on as an entrepreneur is that if you are self-employed, then self-employment tax is what you pay instead of income tax.
My sweet summer child. I wish.
So I used one of those tax calculators and I looked at the self-employment line and I put in how much money I thought I would make for the year. And I got the number and I said, oh, so that's all the taxes I need to pay this year.
How much did they hit you with?
I can't even remember at this point. I think it was somewhere around like maybe $10,000 I thought I was going to owe. And so I saved that amount up. I also did not know about quarterly estimates.
You're like, I'm responsible. I've got all the money.
I've got it. I'm going to pay it at the end of the year. We're good. And then this was literally during Christmas time. I was at Anna's house for Christmas. Around the dinner table, we were just hanging out and I had my laptop open. And for some reason, I was Googling around about taxes. And then I started, the pieces just started to fall into place. Oh, income taxes in addition to self-employment tax.
I love that you're trying to give yourself a panic attack and like around everybody at the table for some reason.
Oh no. So yeah, I realized that income tax is not replaced by self-employment tax, and it is more than self-employment tax. So all self-employment tax is that 7.5% Medicare, Medicaid, Social Security that you would pay as an employee, and also the 7.5% that your employer would pay. If you're a sole proprietor or general partner or whatever, you pay that whole thing yourself. It represents about 15% of your income.
Yeah.
I didn't know that then. I thought that was the only taxes I owed.
That would be
but
beautiful.
That's not true. Yeah. So then I realized, oh no, I actually owe about 40% of my income to the government. And I had to hustle and scrape for the next few months to pay back the IRS before it got to a late period.
And it sucks because you gotta make all that money, right? But that money that you're making to pay out the taxes is also taxed.
Yep.
So you got
It was real bad. I didn't like it. I learned my lesson. And I also learned that when you're an entrepreneur, you have to pay quarterly estimates. So this was all hidden from me. When you're an employee, like technically the taxes that come out of the profit your company is making or the money you're being paid, it technically is due every month, but it's super hidden from you because as an employee, all you ever know is that there are some taxes withheld from your paycheck. And then at the end of the year or in April, you get a return or what they call a refund, right? And the only reason they give you a refund is because the way you have set up withholding at your job usually means they withhold more from your paycheck than is actually needed to pay your taxes.
Yeah, so you're not getting free money. You just already paid too much.
And it's kind of silly. Like people get so excited about the refund at the end of the year, but really all they've done is give the government an interest-free loan for the entire year.
Yeah.
But they're like, yeah, I'm going to go buy a new big screen TV with that money that I got back from the government. It's like, yeah, that should have been your money in the first place. And you could have put it in the stock market, but you didn't.
Yeah.
Uncle Sam put it in the stock market for you and kept the interest.
Well, that's nice.
That's nice, but you don't get the interest.
I love my uncle.
It's not so nice. Well, hey, if you love your uncle.
I got a cool uncle.
That's like a little Christmas present for Uncle Sam.
Yeah.
You know? Or Easter present.
That's fine.
So you have to do quarterly estimates when you're an entrepreneur. And all this means is that every quarter you send to the government what you think you owe in taxes. And this can be hard to figure out, especially if your income's really variable, but the easiest way to figure it out is to look at what you made last year, divide that by 4, and if you're reasonably confident that you're not going to make a zillion more dollars this year or a zillion less dollars, send off that to the government. So if my tax that I owed last year was $10,000 total, then every quarter I would send off $2,500.
Yeah.
And then at the end of the year, as long as you're not too far below what you actually owe, you can pay off the difference without any fee.
Yeah, they won't be. You can't be perfect at the estimates, and they know that. It's just if you haven't. I don't remember the threshold. Maybe it's like 90%. You have to pay like 90% of your owed taxes, and then they're like, okay, you rounded off the last 10. We'll just get that now from you. Thanks.
Mm-hmm. And to allay any fears here, if you are beneath that,
it's a little fine.
Fee. I think that year when I never paid quarterlies at all, and I had to pay all that money back, I think it was like $100 fee.
And that sucks, but compared to what you're probably paying in the taxes, like you won't care as much. Just learn the lesson for next year.
Yeah, it was a slap on the wrist.
Yeah.
And honestly, I think this year...
You're not ruined if you haven't been doing it already this year.
Mm-hmm. And I think this year I've been paying more than I owe. And this is a little trick that I learned from Pat Flynn. After this whole debacle with my taxes that happened last year... That's your phone, by the way.
I thought that was on Do Not Disturb. Oh.
But you have a very special person in your life who can disturb you.
Not right now.
What was this? Oh, Pat said that he put half of literally every dollar he made into a bank account just for taxes. And that would mean that basically no matter what happens, he's always got money for taxes. Even if he screws up something, even if he does the math wrong, the money's sitting there in a tax savings account. So now I have that. I have a special tax savings account. Every time we get money, I put a certain bit in there, and we're good to go. So yeah. Do you need to talk to her?
Oh no, I'm working on it. We're fine.
Okay, cool. All right, so that's quarterlies. That's taxes. You got to pay them. It's not that bad. And what I'll end on here is that if you don't know how to do it, you can get an accountant.
Yeah.
Or how do you do it? TurboTax?
TurboTax, yeah.
Okay. And what do you pay for that?
I don't know. I do have to pay, like, in addition to the income tax, you have to pay for an extra TurboTax package to do self-employment stuff.
Okay.
So I don't actually remember what that adds up to.
I think I ended up paying
100 and something.
I think I was
maybe
paying $250 a year for my accountant to do it. But for me, I was also doing TurboTax for a while. And for a while, even in college, I did the VITA program, which has accounting students do your taxes for free as practice for their CPAs.
Oh, that's cool.
So I got my taxes done for free then. But eventually I got to the point in my business where I just wanted peace of mind. I wanted somebody who was an expert to tell me, you're not doing it wrong and you're fine.
Yeah.
And that's worth the money for me. Okay, so contracts. With taxes and contracts, this is where that common advice comes that every entrepreneur should have a lawyer and an accountant. And I will tell you, when I was younger, I thought to myself, a lawyer will cost me $11 billion. And I think an accountant will too. So I'm just going to do everything myself. And there's actually value in that. I think when you're scrappy and you have very little money, it's worth learning how to do these things yourself.
It's worth it for nothing else than just to, like, at that time, it's like recommitting to yourself.
Yeah.
Saying, I take this so seriously, I'm going to work this hard at it.
Yep. But now, whenever I get a contract, if it is a sufficiently complicated contract, meaning more than, say, 3 pages, I will send it to my lawyer and have her look over it. Because a lot of times there are things in there that I would never catch. For instance, I had a contract come to me recently, and there was like a limitation of liability clause in there. And usually people skip right over those because they're the most boilerplatey, like hard to read portions of a contract. But I read mine, and I was thinking, this is worded in a way that basically says if I screw up, I owe them my entire life and everything that my children will ever make. But if they screw up, they don't owe me almost anything. And I didn't like that. Mm-hmm. So I had my lawyer look at it, and she was like, yeah, this is a little bit one-sided, so you should just tell them to strike this clause if you're going to sign it. So that could potentially save me a lot of money in the future.
Professionals are useful. It turns out that as long as this stuff remains complicated, and it will,
yep,
it's not a bad thing to rely on somebody else who knows way more about it.
It turns out people who know the law are worth consulting in certain cases. But I am very aware that the services of a lawyer can be expensive.
Yeah.
I'll often pay like $150 to have my lawyer look at a contract if she has to look at it a few times, because sometimes there is back and forth negotiation. So in the beginning, what you can do is, one, you can find boilerplate contracts and you can use those. And obviously a lawyer isn't vetting them, and I'm not a lawyer, so I don't want to say like this is totally fine to do, but it's often better to have a modified boilerplate sample contract than to have no contract at all.
Yeah.
And there's also an app called Shake by Legal Shield.
Oh, yeah, I've heard of that.
And I've used this. Actually, my video editors, we had a contract at one point because they needed new computer hardware to be able to do the kind of animations that I wanted, but they needed money for the computer hardware. So I prepaid for a certain number of videos so that way they could buy new computers. And because I was prepaying, I was like, we should have a contract. And with Shake, it was super easy. They was just like a little wizard. We agreed to do this many videos for this price, and then it kind of takes care of the boilerplate.
That's cool.
That's free, and again, it's better than having no contract. So yeah, taxes, contracts, accounting. We've gone through all that, business types, and let's see here. What do we have next? We have everything is funnels, and I want to talk about different value types, all kinds of cool stuff like that. We're going to get into some more fun stuff. I think the taxes and contracts is maybe the little...
Oh, I love taxes and contracts. It
is pretty fun. It's pretty wild. I mean, Ben Wyatt would be pretty into it.
Ooh.
But we got some other stuff to talk about. First, though, I want to talk about our sponsor this week is StoryBlocks. And they've been sponsoring our podcast for a few weeks now. So really thankful to them for supporting our show. StoryBlocks is a library of royalty-free videos, audio, and stock images that you can use for anything that you're creating, whether it's for personal use or for profit. And the great thing about StoryBlocks is that when you pay, you get access to a member library with hundreds of thousands of these assets, and you can use as many as you want. You can download an unlimited number and use them in your projects for one low monthly or annual fee. And this is really useful if you are a YouTuber like us. I guess like me. You're not really a YouTuber.
I'm only accidentally on YouTube.
You are on YouTube. But yeah, you wouldn't call yourself a YouTuber.
I tripped and I fell, and I was on YouTube.
You tripped and fell, and you were on YouTube. Yep.
It was
that just happens sometimes, you know? I'm a little bit more deliberate with it.
Yeah.
You know, and not on this channel so much, but on my main channel, I often do need stock images and stock video files and audio clips and sound effects to make my videos more compelling. And I know when I make my videos more compelling, more people watch them, the channel grows. And I think that's been a really big differentiating factor in what's helped my channel grow. And I can point to a lot of friends of mine who have channels that use stock images, stock photos, and they use a lot of things that really visually illustrate what they're talking about and make their videos a lot more compelling to watch. But the problem is, a lot of times when you go to other sites to find stuff like this, you pay per piece of media. And I remember my girlfriend was looking for an image of an old-timey boxer at one point. I don't remember the guy's name, but you know the picture. It's like the dude with the knuckles.
Little Mac?
Yeah, maybe Little Mac. It's Little Mac. Or like the historical inspiration for Little Mac. Yeah, that guy. And I think the site wanted $150 just for the one image. You know, and that's just crazy. So I ended up finding some really, really old pictures of other boxes that she could use. But in many cases, that's like the only option you have if you're using a site like that. And I myself have paid like $50 for one clip of footage in the past. And yeah, it spruces up the video, but that's eating into the budget. So if you have access to a huge library of high quality content like this, a lot of times you don't feel that creative restriction because you know that you can go and you can find almost anything you need regardless of the project you're working on. They've got 400,000 images, 150,000 videos, and over 100,000 audio clips, both sound effects, transition noises, whooshes, pops, all that kind of stuff, and background music that you can use in your videos. And they're always adding more, so whenever you have a new project, you can find something new and fresh to add in. So if you are a creator or you've been wanting to create something and you want to make sure it's as high quality as possible, definitely go give StoryBlocks a try. And right now, you can get access to all three of their libraries, the audio clips, the video clips, and the image library, all three as a bundle for $149 for an entire year. You can go to storyblocks.com/collegeinfogeek to take advantage of that offer and help to support this show. So thanks to StoryBlocks for sponsoring this episode, and let's get back to Everything is Funnels. That's what I had to call this section here.
Okay.
So this is more of a fundamental and philosophical, I mean not philosophical, but more strategic. That's the word. Yeah. Strategic. Yeah. Strategic part of the episode. So we talked about the nuts and bolts of taxes and contracts already. What I want to talk about now is the lifeblood of your business. Regardless of what your business is, the lifeblood is cash flow. Money in, money out. Because there needs to be more money coming in than going out if you want to be able to survive as a business.
That is definitely true.
Yep. So if you're a freelance web designer, you need to have enough clients to be bringing in money, and that needs to outweigh your expenses, both business expenses and your personal expenses. Same with a restaurant, same with anything. Now, the reason I called this section Everything is Funnels is because this is how I see business. Everything is a funnel with a wide mouth that goes down to a very narrow bottom. And because I'm an online content creator, this is the most easy example for me to think of, but say we have a product, which we don't right now, but say we do. Actually, no, we kind of do have a product. Okay, so we have the print version of 10 Steps to Earning Awesome Grades, which is the free book that I offer to people. It's a free downloadable ebook, but if they want, they can go over to Amazon, they can buy it for about $10. So I earn, I think, maybe $2.50 royalty on every copy sold of that book in print. So just say that's the only thing we have. If that's the only thing we use to make money, then it's $2.50 times however many units we need to ship to not starve. And I don't know, say we need to bring in $2,500 a month. So I need to sell, what is that? 250?
It's like 10.
Or not 250. It's like
1,000?
I don't know. I need to sell 1,000 units per
Numbers.
month. I've been bad at math today. I don't know why, but we need to ship 1,000 units. So that gives us $2,500. All right. So 1,000 units is 1,000 customers, but that's the bottom of the funnel because I can't just go out to a random 1,000 people and expect every single one of them to want to buy a copy of my book.
All right.
A lot of them are going to say no. And in almost any business, the vast majority of the people that you put your product out to are going to say no in the form of ignoring it. Or if you're doing a very direct sales model, they're just going to say no.
Yeah.
Flat out. We're not doing very direct sales at all. We're doing the one where people can ignore it because it's literally just a link on the download page. Hey, if you want it, you can download it. And it's not even that compelling because the book is free anyway.
Yeah.
So like it's only if people want the print version. So in order to get that 1,000 units shipped, we need to get the word out to way more people. And let's just say back of the napkin numbers, we have a 1% conversion rate on it. That means we need to get 100,000 people the information that, hey, this book is for sale, you should buy it.
Yeah.
So that is what I mean by everything is funnels. You need to get your message out to a certain number of people, and then you need to tweak whatever variables need tweaking to bump that conversion rate percentage up as much as you possibly can, so that way you get more sales for the people that you're getting your message out to.
Yeah. Yeah. So you shouldn't be confused when people say no. You should say, this is exactly what I'm supposed to be expecting.
Exactly. And this is a bit of a digression from entrepreneurship, but this is very important to keep in mind when you're looking for a job as well.
Oh, yeah.
Job hunting is a funnel process because there's X number of people that you're going to go apply to, but there's only a few that are going to actually offer you a job or offer you an interview. And every funnel has multiple stages. So for us, it isn't just get people to know about the book and then people buy the book. For us, it's how many views do we get on YouTube? Okay, so that's X number. How many people from the YouTube video actually click the link to go to the page where they can download the book? That's a certain percentage. And we could probably go to our analytics program to figure out how many that is.
Yeah.
Then there's a certain fraction of those people who actually put in their email address and download the book. It's not all of them. So at every step, there's a filtering down. Then there's all those people. There's a certain percentage of people who actually click the link in the email and get the book. Now, luckily, that is most of them, as it should be, but there's still inevitably a few who don't. And then there is the very low percentage of people who are in that group who also want to buy the print version of the book. So we have a very multi-step funnel there. So I think like the way to be successful with building a business funnel is, one, figure out how to reduce the number of filtering points in your funnel before there's a sale. But more importantly, figure out how to get out to more people, and for any given number of people you've gotten your message out to, how to increase that conversion rate. Yeah. You can do that by making your pricing model more attractive. Now, it doesn't always mean you make your pricing model less. Sometimes more attractive is more expensive. I was reading Anthony Bourdain's novel, or I guess it's memoir, Kitchen Confidential, yesterday, and he was telling a story about how he and this guy from the restaurant he worked at as a teenager got together and they did catering, and they totally did the Tom Haverford Entertainment 720 thing where they handed out business cards but said, hey, we're too expensive for you and we're super booked anyway. But it actually worked for them because they had, one, a track record of one very successful event they had done in the past, but two, they had built this perception of exclusivity and like they were the best people to hire, which made the desire go up. You know, if you're a fancy caterer saying you can make super awesome wedding cakes or something, and you say, my wedding cakes are $10, I'm not buying your wedding cake.
Yeah.
You know, because what is it? It's going to be like a single cupcake you bought from Hy-Vee.
Something's wrong.
With like a ring pop in it, you know?
Aww.
I expect to pay a couple of $100 at least for a really good wedding cake. So if you tell me, yeah, it's $200, I'm going to rip your eyes out, but it's going to be great. Awesome. You know, you're going to build that perception.
Yeah.
So, and this isn't an episode all about pricing, but I do want to talk about that because some people think that cheaper is always better. And that's not the case. I shop at Target sometimes and not Walmart. I know Target's more expensive.
Yeah, it definitely depends on your audience and what they're looking for.
Exactly. Yeah. Yeah. And, you know, that's also another factor of it. Who are you targeting? So if you're a web designer, you could target 10 people who are just mom and pop shops who need a one-page website and they're willing to pay $200 for it. And you'll make $2,000. Or you could target one person who needs a bit more of a complex website and you could charge $10,000 for that project. Well, now maybe it's a more difficult project, but you've just eliminated all the work involved in finding 9 extra clients.
Yeah.
Your marketing budget is smaller. You have to do way less calls and meetings, way less, butt kissing, all that kind of stuff. You got one person you're working for. And in a lot of cases, maybe that one person is easier to work for. Maybe they're more professional. Maybe they understand that you are the designer, you're the coder, whereas the person who's willing to pay less money is also a little bit more naive, thinks that they know better than you. It might be more frustrating.
Well, they may view your services as more of a commodity.
Exactly.
The person paying a lot knows they're paying you because you know what you're doing. That's why you're a lot.
Yeah. One of my favorite stories about this is when Steve Jobs was looking for a logo for Next, which was the company he formed right after Apple. And I forget the guy's name, but he went to this really famous designer who lives in New York City. He had done logos for all kinds of companies. And when he contacted this guy, the guy said, I will do a logo for you. It will cost $75,000. And if you don't like it, you are free to not use it. But that's the logo I'll make for you. And of course, Steve Jobs being Steve Jobs, he had all these changes he wanted to make and everything. But the guy was like, no, this is the logo I'm going to make for you. And Steve really respected that. He really respected this guy, knowing that he was the expert. He had all of the experience, and Steve was the client.
Yeah.
Whereas if he had just hired a person off of Fiverr.com, that person's not going to be treated with the same amount of respect because they command a $5 logo, not a $75,000 logo.
Yeah.
Now, obviously, and I think this is something that a lot of people need to hear because I needed to hear it. If you want to be able to command respect and command a high price, you need something to back that up.
Oh yeah, you can't just be like, this is my first project, but I'm thinking $20,000
exactly
minimum.
So the Entertainment 720 thing from Parks and Rec, where Tom and whatever the guy's name is, John Ralphio, they're just like, oh yeah, we're super booked up, and I don't even think they had a product, but they had no track record at all anyway, so they couldn't build hype, even with all their tactics that they thought would work. Whereas the Anthony Bourdain story, while very similar, they had one really successful event under their belt that was done for one of the most successful restaurateurs or tours in the town there. So there was word getting around based off of their work. So if you have a great portfolio or you have testimonials from some really important people, boom, now you can command a high price. If you're just off the street, you have no experience, you're brand new. At this point, maybe you want to work for free or you want to work for a huge discount. At that point, you want to build relationships and you want to build a track record and you want to have some people who will vouch for you.
Yeah.
Yeah, exactly. So that's the funnels. Now, I think people are going to ask us how the funnel concept applies to advertising because a lot of people know that we literally just did a sponsorship spot for StoryBlocks. So we're not just selling a product, and it might seem like there isn't a funnel there because we have an advertisement on the YouTube video, which itself is the top of the funnel, right? I mean, that's kind of how it seems to me. So I did want to explain this because every business model does have a funnel behind it. So in this case, basically the way that advertisers buy ads is on something called a CPM. And I don't know why they call it CPM instead of CPT, because CPM just means cost per mille, which is 1,000.
It's fancier.
I guess, hey, it's fancier. There, we use jargon to keep the industries a little bit more lofty, a little more complicated sounding.
Yeah.
It basically means we're going to pay X dollars per 1,000 views. So, and this is just totally back of the napkin numbers, but let's just say you have a YouTube video that does 1 million views. Well, how many thousands is that? That's 1,000 thousands. So, all right, if I paid $2 per 1,000, then I'm going to pay you $2,000 for those 1 million views.
Yeah.
And that's like right in the middle of what YouTube pays, though it's a big range of what YouTube pays. But from our perspective, yes, there is that CPM. So if you can drive 1 million views, you're going to get that $2,000 or whatever CPM you can charge. But behind every CPM is a cost per acquisition, because companies aren't just paying for views. If there were no funnel behind the views, then the views are totally useless to that company that's paying for the ad, right?
Yeah.
If Pokemon were paying us money just to say Pokemon's cool, I mean, maybe we're building some brand awareness, but if we don't tell somebody, hey, go buy the new Pokemon game, it's not really doing much for them.
Yeah, they're hoping for us to put people into their top of the funnel that goes into their sales things.
Exactly.
Although Pokemon is cool.
Or a good example for our sponsor.
Fun fact.
Our sponsor knows that not every single person who listens to this podcast is going to use their product, but a certain percentage will. So that's how they can do a CPM based on, we have a cost per acquisition. So if we're paying X number of dollars per 1,000 views and we have a conversion rate of 2% or 1%, then we can do the math and figure out what does it cost us to acquire one customer. And behind every CPA, cost per acquisition, is a customer lifetime value, which is another formula, complicated 3-letter acronym. Basically, all it says is this is how much we expect to make off of a customer throughout the lifetime of them being a customer with us.
Yeah.
There's some really good pricing studies about Netflix and how they figure out their customer lifetime value.
That would be interesting.
And customer lifetime value is different for a monthly subscription than it is for, say, a jeweler. A jeweler can still do a customer lifetime value. You come in and you buy an engagement ring from me. I'm a jeweler. Well, I can say, all right, this guy's going to buy an engagement ring from me. If I'm really good, he's probably also going to come in and buy his wedding ring from me. And, in 20 years, maybe he'll send his son here too. There's a lower probability of that happening. But if you buy an engagement ring from me, you're probably going to buy your wedding ring from me too. So I can say, all right, your average CLV is going to be whatever the engagement ring cost plus probabilistic function of you buying a wedding ring and the average price of that.
Yeah.
And now based on that, I could say, all right, your CLV is $5,000. And based on that, I'm willing to pay $4,000 to acquire you as a customer. So if I have a 1% conversion rate, I could take $4,000 and I could go and buy a certain amount of views. I'm not going to do the math in my head right now.
Numbers.
But somebody listening at home can do the math. But it would be profitable. If I know I've got a 1% conversion rate, then I could take $4,000 and spend whatever it takes. Or I could spend on some sort of platform that has a 1% conversion rate to get the number of views that would require to get me one customer.
Yeah.
And then if I get $5,000 from that customer, boom, I make $1,000 profit. But there's a funnel behind everything.
Yeah.
Everything. Okay, so I did want to talk about the 12 standard types of value, but I don't know if we have time for that. And also I'm remembering, I think we talked about it in the personal MBA episode. I think
if that is true, then definitely check out the personal MBA episode.
Yeah.
It's a good episode.
If you are interested in starting your own business, read this book. It's called The Personal MBA by Josh Kaufman. And we did a podcast episode on it, so I will have that in the show notes. But there is a part in the first chapter pretty early on in the book where he describes the 12 types of value. And I think that's really interesting to read through if you are interested in running your own business, because it can open your eyes to the different opportunities out there. You might think right now the only way to make money is to sell something, to sell a service, or to sell widgets. But there are other ways to make money. You can do rental properties. You can do options trading. You can do all kinds of stuff. Yeah. So definitely give that book a look. And it also goes into finance and marketing and all kinds of cool stuff. The one thing I wanted to talk about to wrap this episode up, though, is the question of funding. So every business needs a certain amount of money to get off the ground. Most businesses can't immediately start making a profit. Maybe if you're a freelancer, and let's just say you already have a ton of web development skill from a previous job or from some side projects, it would be really easy for you to go and find a client and make money on your first thing. Yeah. But for the most part, a lot of businesses to get started have to buy equipment and they have to pay for marketing before they can ever get off the ground, before they find their first customer. And that brings up the question of, well, how do I get that initial money in the first place? Or if I'm puttering along at a certain rate in my business and I want to grow it, well, how do I get an influx of capital to grow it? And a lot of people will go look for external funding, venture capital, angel funding, stuff like that. So there's a pro in this, in that it can accelerate your business faster than you could grow it without that injection of capital, right? Because now if you get $1 million investment, you can hire some employees. Yeah. I can hire some engineers, I can hire some marketers, we can accelerate this thing. And this is the big downside. The moment you accept external funding, now you're no longer truly independent. Because now the investor who has put money into your business has a vested interest in you returning a profit. And if your business is in business for a reason other than just to make a profit, then that reason that you initially started with can be compromised by the external funding. For example, our mission with College Info Geek is to provide the best information for students to improve their lives out there. And we do certain things to make a profit. We have sponsors on some episodes. We have sponsors on my videos. We sell certain things. But for the most part, we try to provide a lot of information for free. If we had a big company who had put a bunch of money into us, maybe one day they're oh, you need to actually hold back on some of that information, or you need to price something higher. Like maybe we're going to sell a course someday, and they're like, oh, you need to price that higher. And maybe we wouldn't want to. Maybe we'd want to say, well, we want that course to be pretty cheap so that people can afford it. But once they fund you,
now they own us basically.
Exactly, yeah. And I want to end this with a quote from the people who ran the channel Every Frame of Painting, which is still on YouTube, and it is one of the best channels on YouTube. They do incredible video essays. But they did this post-mortem article on Medium about why their channel shut down. And they were talking about that iron triangle of any kind of media creation, where it's good, fast, cheap, pick two.
Yeah.
It can be good and fast, but it's not going to be cheap. It can be fast and cheap, but it won't be good. Or it can be cheap and good, but it won't be fast. And when you're running your own channel, you're independent, you want your stuff to be good. So you're either willing to put a lot of money into it or for it to be slow. But, say a big company owns your YouTube channel and they really want to increase profit, and they know that they can increase profit by making longer videos and publishing daily. Well, now maybe it won't be good anymore. Maybe they can game the algorithm, but the heart and soul of your content is gone. So the quote from the article I wanted to share goes like this. Unfortunately, no matter how hard you try, nobody can cheat this triangle. And sooner or later, all these large sites will bleed money, at which point some executive will say we need to make our content both faster and cheaper. This is why we encourage every single person who wants to make something on the internet to understand the value of independence. This is not about artistic integrity or even money. We kept Every Frame of Painting independent because as long as we could control this triangle, we could control the end result. So keep that in mind.
Yeah.
I think people watching this podcast are likely to be students at this point in your life. Maybe you're thinking about a freelance venture or something small. So that's unlikely to bring in the concept of external funding. But I also believe very strongly that people who watch this podcast are very smart. They're very intelligent. And a good number of them are going to have entrepreneurial ideas that may require funding in the future. So I want you to keep this in mind. Keep in mind the value of independence and the value of being able to execute on your own vision without having somebody else's money bringing in their priorities. And I'm not saying you don't take funding. There are definitely, there are investors out there who are also very ethical or who may be totally on board with your vision, but you have to do your due diligence and you have to realize that once somebody else's money is in the game, they have an incentive, they have a voice as well, and it can compromise what you want to do. So I think that's pretty good. I know you have a girlfriend to go pick up from the train station.
I do.
Cool. So guys, this is episode 190. You can find the show notes over at cigpodcast.com/190, or if you're on YouTube, click that link in the description down below. If you want to support this show, a great way to do it is over on Apple Podcasts. Give us a rating and review. That helps bump us up the charts and just gives us good feedback. So huge thanks to you guys if you do that. And as always, thanks for listening. We'll see you next week. And don't forget. Don't remember to stay cute. Going with it. Don't remember to stay cute. Yeah.